Alright, let's get going with a market overview. I currently have SPY, Dollar Strength Index, SPXU, which is a SPY ETF, it's an inversion or an inverted ETF, so it trades the opposite of SPY. And then GLD, which is an ETF that represents gold. It's supposed to perform with the price of gold. So let's just pull out a pen and let's start drawing some lines. I think it's pretty safe to say we're in a downtrend on SPY, and that's just the way it goes sometimes. We did have a doji down here. I'm gonna call it a doji. It's not like quite a doji, I don't think, but we're gonna call it doji. And this is supposedly a bullish doji. It's called bullish because it's theoretically expressing a lack of downward pressure after a large decline, suggesting that the selling pressure is over. But actually, Volkowski tested this, and per Volkowski, it's a bearish continuation pattern most of the time. Most of the time. So forget that so-called bullish doji. It's a bearish thing. And what's important too is to note, we got a confirmation close the very next day. These candlestick patterns are just like chart patterns. They need a confirmation close in order to confirm as valid, and they can throw back or pull back just like the chart patterns can. So remember that. Candlestick patterns are no different than chart patterns. They're just expressed in a different way. And we have had this confirmation close, and so to see today being a big dump, another little dump, makes sense. I didn't calculate a price target, but I'd be interested to know where that is. I bet you that we'll get there tomorrow. I don't really know. I do think Friday's gonna be a bad day. I think we're gonna have some scary days ahead of us. Big scary days. And then we'll see a little bounce, and we'll see after that bounce whether or not we're going in for new lows. If you are subscribed to Capivision, you know what I'm looking for. That subscription costs $1.99 a month, and you get access to a private channel in the Discord server where I drop a lot of charts, I do a lot of analysis, and I'm just more available there. If you do sign up for Capivision, you're going to need to comment your Discord username on one of the Capivision only posts under the community tab, and then I'll be sure to add you. Let's talk about dollar strength. The dollar has been moving sideways for a long time. You're going to notice these little arrows through here. These are buy and sell signals that Obi-Wan's Mewtwo indicator has generated. They're pretty solid signals. As you can see in GLD, it did correctly forecast this big decline, which sucks. I've been saying I need the dollar to move to watch gold rise, and the dollar is not moving. Look at this on a closing basis. There's a close, here's a close, here's a close, there's a close. I'm just going to connect all of these closes, and you can just tell right now, look how flat this is. It's so flat. The dollar on a line chart is moving sideways, which is insane to me. It's going to move really big. Who knows which way, though? I don't understand currency markets enough to really know. I'm hoping it's down because that would help gold go up. Oh, yeah, but it's gonna be scary if GLD breaks that 158 level. I'm gonna have to go bearish on GLD and make a decision. Do I hodl or do I sell? How am I gonna make this say sell? Wow, okay. That works. I'm gonna hodl. Just because it's money I don't immediately need. I do think in the longer term we will see bullish reversal, but it is possible that the 335 pattern that we're currently in GLD, and it currently looks like this 1 2 3 1 2 3, and then it's 1 2 3 4 5. It's possible that this low comes in below the low of the 335. It's still a 335 flat if it does, but that would suck. It's unpleasant. It's not all roses. It's not all money. Sometimes it just sucks. Of course, I didn't hold on my AMC or GameStop. I sold at those last highs. I mean, the analysis has been on point. On point. I've been calling those downtrends, those reversals in the meme stocks. I mean, in BBBY, GME, AMC. It's nuts. The analysis has been so on point. You'd think people would be just impressed and follow me and say, whoa, who was that one guy? Geez, I wish I had sold alongside with him. But no, that's not cool yet. That's not what the cool kids are saying. So just forget about my channel and all my analysis and the amazing price targets. Doesn't matter, it's not cool. I'm not pessimistic about it at all. Anyway, SPXU is doing really well. We're seeing this push up, of course, as SPY moves down. Today, I took a little profit. I sold the call I had. The strike was at 17.50, and as you can see, the price closed below there. And so every day that you near the expiration of your contract while the price is below the strike of the contract, that's bad for the value of the contract. And it's weekly, so I hopped out before it expired on Friday. It's very possible that we do see a reversal in SPY soon, in which case I don't want to be caught holding a call on the inverted ETF. So I moved into shares instead so I can hold, because I'm very bearish on SPY. I'm very bullish on GLD. I have no idea what the dollar is up to, but I'm pretty sure XPXU will continue upwards as SPY continues to dump. Now let's talk about SPY on the weekly time frame. You're going to see these yellow lines. This is a descending broadening wedge. Everyone and their dog is following this pattern, which is good, because I believe that's the correct chart pattern to identify here. Let's just talk about what Bulkowski would do at this third touch point. Yeah, he would short. Bulkowski's trading tips suggest shorting when you see the price encounter a trend line here for the third time and start to move the other way. And so this to me says short. And look, on a weekly basis, we have a gap to fill right near the market low for the year. So what's that mean? Well, we're probably going to just keep dumping. And yikes, it looks like we have the beginnings of a vertical run down, where we have the open of each candle below the close of the prior. And so we need 4 candles to properly form that pattern. We only have 3. It's pretty common to have that 4th one messed up. There is well, the only problem is the vertical run down generally doesn't include overlap between candles, and so here we have a wick that comes into the range of the first 2, but this looks like a vertical run down through there. And you can see how strong and how powerful that was. And I'm like, you could probably copy and paste that right here, and that'd be just fine. And that's actually a very common technique. It's called the measure rule. That's typically, let's write this down. When we talk about the measure rule, all you're doing is you're taking the height of a move, and then you find where the reversal occurs, and you apply that same height to the top of that reversal, and you get your next price target. And here, if we get that move, it's going to be gnarly, obviously, taking us to new lows. Again, if you want to know what my analysis is on SPX, subscribe to Capivision. It's pretty cool. The RSI here failing to rise above 50 is very bearish. Volume is decreasing. So we're going to need to see an increase in selling volume, I think. But bear markets don't need volume like bull markets do. Don't know why, just the way it is. Here you can see implied volatility is kind of wish-washy in the middle of its range. Kind of coming down actually a little bit, which seems interesting. I guess we are now retracing. We're still retracing this move, this small push higher. I do anticipate to see implied volatility increase when we're beginning the run to a new low. So I'm watching implied volatility very closely for that cue. Now here's AMC and APE. They're both just like dumping, and I keep saying that. Expect more downside, and then we get more downside. And it's just been too easy. That's just been the analysis. And implied volatility dropping is really wicked too. That probably happened because the price bounced towards the end of the day. And where did we close? We did close below the prior close, which is bearish. And this still doesn't look like it's ready to bounce yet. So that's just bad news. There's gonna be a bounce at some point, right? That's what I'm told. But I think now what we're actually looking for is for the combined price of both these equities to come back down and test 970. And where are they currently at? 9 and 4, 13. We're at like 13.99 or something like that. Incredible. That's sub 15. I remember when I commented on one of Booksy's Twitter posts that we were going sub 15. And there you go. There it is. You know, never mind. The price was like $25 at the time, and I was like, we're gonna go down to like by almost 50%, and then we did. And that's not even the first time I've done that. I've done that several times in the past, but you know what it takes to get famous is you just gotta stroke people's egos. Ridiculous. I'm not bitter. I'm just in a bad mood because work sucks. All right, I'm gonna go. Happy trading.